Hello everyone and welcome to today's video where we'll be discussing considerations for European infrastructure and energy private equity funds entering the US market. Whether you're here to understand the key takeaways as a private equity investor or to explore how entering the US market might impact you as a foreigner, you're in the right place. I'm Dan Hall, managing partner of DHR's London office and co-head of our sustainable infrastructure and energy practice. Today, I'm joined by Nick Kato, Managing Director at Leo Berwick, and Jen Skylakos, Managing Partner in DHR's New York office and Global Lead of our Sustainable Infrastructure and Energy Funds Group. Nick, Jen, thanks for being here. Please could you take a minute to just introduce yourselves quickly. Nick?
Yeah, thanks, Dan. Really excited to be here. This is an amazing topic, and obviously love collaborating with DHR. So Nick Kato here, managing partner of Leo Berwick. Our firm focuses on the financial and tax aspects of deals in infrastructure, energy transition, and renewables. So we're handling tax and financial due diligence, tax and financial modeling, structuring, so on and so forth. And we have a big focus on helping non-US investors invest into the US in this sector.
Thanks, Nick. So like Dan said, I co-head DHR's Sustainable Infrastructure and Energy practice. Our team provides tailored leadership advisory and recruitment services to investment funds and their portfolio companies and private and public industrial companies looking to create energy transition teams to help meet their corporate goals. Our aim is to create long-term partnerships with our clients to become an integral part of their organization's talent value chain and help advise them when they're looking to expand into new geographies or asset classes.
Thanks, Jen. Thanks, Nick. Before we delve into the practicalities of European infrastructure and energy private equity firms venturing into the US market, let's address the question, why now? Over the past decade, we've witnessed a significant shift in global economic landscapes and market opportunities. The US, being the world's largest economy and a hub for innovation, continues to attract substantial foreign investment from European infrastructure and energy funds. Several factors have converged in recent years to create a ripe environment for European general partners to expand across the Atlantic. These include favorable regulatory changes, such as the Inflation Reduction Act, which have accelerated significant opportunities in the renewable energy sector. Nick, can you expand on what you have seen in the past few years with your expertise in assisting foreign clients coming into the US?
Yeah, absolutely. So while kind of typical private equity has slowed down a bit in the US, I would say, infrastructure, renewable energy transition investing over the last 2 years has been on fire. I've never seen it busier, quite frankly. On the infrastructure side, you're seeing everything from P3s to digital deals to transport to regulated utilities, really social infrastructure, all these areas, just lots of growth, lots of interest in investment. And then obviously you mentioned the IRA. That's generating a lot of investment in renewable energy and energy transition as a whole, quite frankly, and you couple all of that just with kind of the aging infrastructure of the United States, and it just makes sense. And the tailwinds are very strong for accelerated growth in these sectors in the future.
Thanks, Nick. And it's really valuable to collaborate with you and the team at Leo Berwick on this topic, as we're both hearing from many of the same funds looking for advice across our areas of expertise. We're talking to funds at essentially 3 different stages of evolution. Some funds are still trying to decide whether it's the right time to enter the US market based on their current fundraising capabilities, LP interest, portfolio, and appetite for their strategy in the US. And often there is a stalemate between partners who want to plant the flag and others who are a bit leery. Then there are funds that have already tried to come to the US, may have dipped their toe in and pulled out, or have stayed but are finding it harder than they expected because of a few initial missteps. And they're trying to right the course. And the third are funds ready to come over and recognize that if they're going to invest this heavily into a new region, they want to know what the most responsible way is forward.
Thanks, Jen. And how are you advising your clients when it comes to market opportunities and establishing a presence in the US?
Yeah, so from a market opportunity perspective, when funds ask is now is the right time to enter the US market, a valuable exercise is conducting a benchmark study of their potential competitors, evaluating LP appetite for their offering and whether there is room for them to not only find deals, but attract and build the required local team to meet their goals. Our client's job is not to evaluate other funds, and reading articles or sponsored material or looking at the rankings that come out from time to time really doesn't give the full picture of how their competitors are doing and how then they fit into that landscape. And then from a culture and business difference, when we talk to folks abroad about how they should engage with the US market, there is an interesting assumption that we are somehow homogeneous here, that doing business in New York is the same as Oklahoma or Illinois is the same as California. And so our goal is to educate and ensure that the partners and stakeholders of the fund understand that while having a culture carrier on the ground in the US is essential, they will need to evaluate their best practices and be ready to adapt and be flexible when the team they hire says, we can't do it the way you've always done it because it just doesn't work that way here. And so aligning culture is one thing, but the day-to-day of how we all get to the promised land will be different. And there is nothing that frightens a potential candidate more than an organization headquartered abroad that's rigid in their process. And that's why when we have these discussions, we want to hear from all the senior decision makers that they're ready to adapt on some level to the US. Then when we do go to market, as your brand ambassador to find the right talent, these are exciting and compelling opportunities for people. You get to be part of a team build for a fund that's already established. But from MD level down to associate, candidates will ask a lot of questions and will be looking for consistency in messaging when it comes to how they'll work with HQ, fundraising plans, and commitment to build out the team here. So let's say we get there and it's time to start figuring out those logistics. We also provide advice, contacts, and other services around these topics: office location and cost, compensation. This is a big one and always a shock. I have a stash of smelling salts at the ready for every time we have these conversations because it is considerably higher in the US compared to anywhere in Europe. Benefits, an incredibly important part of any package here in the US. Excellent healthcare, 401k, and such are the baseline for any professional contract in our space. And then you have to find the right vendor, and this is the same for operations and payroll too. Helping our clients find the right employment attorney for contracts and immigration counsel. Then the size of the team and which hires do we pursue when based on the goals. And then of course the big question is who's coming over as the culture carrier. Once that person's been identified, we need to talk to them and their partner potentially, understand their current lifestyle, what they'll need here to be happy, urban or suburban, and which suburb, how old are their kids, do they have any special needs? A whole host of important questions that need answers to ensure the employee's family settles in well. If a family is miserable, then that culture carrier will need to go back home sooner than you want. And it's hard to convince people to come work for a person that they sense is under quite a bit of stress. So in tandem with all of the above, you also need to be conscious, of course, of tax implications for the firm and any of the individuals moving here. And that's where Nick and his team come in.
Yeah, thanks, Jen. Yeah, I would put it into two buckets. The first bucket really being the tax consequences for the folks at the firm and the organization itself. What kind of legal entity do you set up? How do you kind of have intercompany arrangements with it? So on and so forth. Payroll tax considerations, all of those things, really key things that impact the employees and the overall organization. I think just as important or even more important potentially are, the consequences for the LP base, right? The same LP base that you had doing deals in Europe, if you take it to the United States, different considerations exist, right? In the US, you get taxed at the operating company level, you get taxed on distributions coming out of that company, and there can be a tax on exit as well in the US in certain circumstances as well. And we've seen situations where a fund in Europe has kind of tried to use the same fund structure that they've always used to do a deal in the United States, and it's gone, unfortunately, not great, right? That client had a 30% tax on distributions. They had a 21% tax on exit as well for all their LPs, right? And it really had a material impact to their IRR. Whereas if they would have structured it correctly from the onset, the distributions coming out could have actually been zero, no tax on distributions coming out. And their LP base was actually exempt, most of them from this tax on exit, and 2/3 of them could have avoided that tax on exit. And so, just some simple structuring up front and not doing it the same way that they're always used to could have reduced the drag on that deal by 30-40%.
Yeah, thanks, Nick. That's really interesting. Jen, to wrap up here, any closing thoughts?
Thanks, Dan. Yeah, the key takeaways are to make sure there's alignment at the fund, that now is the time to come to the US, that there's a thoughtful approach to integrating the new team while adapting to different business practices and culture, and then ensuring you have a clear hiring plan that supports both the fundraising and investment strategies. organizations get one bite at the apple. And if it doesn't work out, it's hard for talent to take a chance on you the second time around.
Thanks, Jen. Nick, any closing thoughts on your end?
I would just say that, what worked in the past may not work when you're investing in the US. It's different. And I think getting in front of those differences sooner rather than later are really important.
Thanks, Nick. As European funds explore opportunities in the US market, it's crucial to consider a multitude of factors. Whether you aim to diversify your portfolio, capitalize on sector expertise, or forge new alliances, understanding these considerations and strategically navigating the complexities of investing in the US will be key to achieving sustainable growth and maximizing returns. Thank you for joining us. If you would like more information on the topics discussed and how DHR and Leo Berwick can support your fund, please do get in touch. Until next time, stay informed and empowered in your investment journey. Thank you.